All right, shifting focus now. It was Monday blues for the stock market, which crashed on the back of job recession fears in the United States. The 30 index Sensex fell by over 2,600 points at one point before ending the day at 78,759, around 2,200 points and nearly 3% down. The Nifty 50 also traded majority of the day under the 24,000 mark before finally settling at 24,055, which is also nearly 2.7% down. In fact, this was the biggest one-day fall markets have recorded since June 4th this year, when results of the Lok Sabha elections were announced. Now, the bloodbath on Dalal Street was in line with how markets have performed globally after hiring has slowed down in the United States, hinting at a possibility of a recession.
Well, there are a variety of factors why financial assets are down. The selling today is just not restricted to India, it is global in nature and it is restricted to all asset classes, including bonds, currency, gold, and even Bitcoin. Variety of factors are at play. In fact, it's a confluence of factors which are at play. In Japan, the yen carry trade has reversed. Globally, commodity prices have come down, and there is an increase in tension in Middle East. All these factors, when they've come together, they're having impact on the market mood, and in the short term that has led to a jump in market volatility. As a result, what we are seeing, like they say in financial markets, a risk off movement where everybody suddenly wants to take profits off the table. Our viewers must bear in mind that financial markets and especially stock markets have seen an extraordinary run up, and the correction was long overdue. So what changes? In the short term, well, if global markets don't stabilize, you may be in for some more pain ahead and increase in volatility. In the medium term, well, there could be a churn in terms of sectors which will outperform. I expect markets, especially defensives, consumer staples, IT, private banks, they will start outperforming. But in the long term, if you're an SIP investor, nothing changes for India because a drop in commodity prices is beneficial. A global slowdown will help a market like India. And if you're committed to equity for the long term, I guess nothing changes. So yes, the sell-off today will look scary, but that is par for course for any financial markets.